Good morning, traders. And this is Dennis Dick, and this is premarketinfo.com. Today we're going to be talking about Vivus. They get approval from the FDA for their drug Qsymia, and it's trading higher here, almost up 5 points. We're also going to analyze the Vivus flash crash from yesterday. Intel reported last night. VMware and EMC also provided preliminary guidance. We'll analyze their reports. Reporting here this morning, Bank America, Honeywell, Abbott Labs, BlackRock, and USB. We'll analyze those reports. And tonight, we'll take a look ahead at eBay, Qualcomm, American Express, and IBM. But let's first analyze Vivus. This stock here is trading up almost 5 points this morning, up $4.63 after they did get approval from the FDA for their obesity drug Qsymia. Stock is trading well above 31.01 right now, so above yesterday's high, which was 29.90. I'd keep an eye on that 29.90. That whole $30 area may provide you some initial support if it pulls back into that area, but this stock is going to be volatile, and it was very volatile yesterday morning. At around 9:42, the stock went down over 7 points in a matter of just over 30 seconds, and this was a flash crash. I actually analyzed it on the site. If you want to check out that video for full analysis, it is on the site. But basically what you have here is that a lot of people probably thought that they had actually come out with the results because the stock was tanking so hard that the FDA had possibly refused the drug. That wasn't the case. It was just mostly market structural, that there wasn't a lot of liquidity on this issue. Selling pressure came in, people got scared, and they started to sell it off. Stock traded all the way down to $20.90. So it went from 27 bucks down to 20.90 and then back all the way up again, and now actually trading up over 31. So if you bought down here at 21, you're a pretty happy camper, but if you sold down there, you're not too happy with the overall market structure. This is the overall complaint. High frequency traders do provide liquidity when volatility is low. But when volatility rises, even on individual issues, high frequency traders do not provide nearly as much liquidity or none at all. The overall problem is that we have a reliance here. We're very reliant on high frequency trading liquidity now because most of our traditional market makers have been pressed out of this market by those high frequency traders. They're faster and human market makers can't compete anymore. But obviously, computers can't think, they can just do what they're programmed to do. So in some cases, they will actually, like if we look back to the flash crash back in May 6, 2010, when some stocks traded down to 1 cent, that was irrational. A human being would never sell a stock like Accenture at 1 cent, but computers don't know. They just think they're hitting the best bid, and that's what can happen. And not to mention also, as computers push these prices around, they can trigger stops too. Never use stop orders, because if you had a stop order out here during this time, you probably got executed at a very bad price. So stops are just a bad idea. Use mental stops, but using physical stops is never a good idea. So Vivus has had a wild couple of days. It looks like today is going to be wild for Vivus as well. Intel reported last night as well. Stock traded down significantly off the initial report, traded into the mid-24s just after it reported, but then, this is all in the after hours, but then actually popped up. Now has settled just a little bit here, trading at 25.15 right now. So stock is actually trading down 23 cents after the report. So kind of settling in. I'd keep an eye on all these lows here. This 24.68 July 12th low, this low from July 13th at 24.76, and the other low here from 24.85 from July 17th. Keep an eye on those three lows. That could provide you some initial support if the stock goes into sell-off mode. If it rallies, keep an eye on yesterday's high at 25.66. Also reporting last night, just offering preliminary results actually, EMC. And EMC is trading up substantially off of those preliminary results. 24.30 is where it's trading at right now after closing at 22.92. So EMC looks like it's going to have a really good day here. Stock's chart hasn't been great. It has found some support though in the low 22s here, as even yesterday's low of 22.79. So the mid 22s had been providing support. Looks like it's going to bounce substantially off of that area today, possibly test this 24 area. We've had multiple highs over the course of the last month in the 24s. 24.24 was the high on July the 10th. If we go back to late June, we had some highs too. 24.30, the high on June 27th. 24.13, the high on June 26th. So there is a little bit of resistance in these low 24s. If we start to get above there, then the stock could really start to move because it starts to open up. Once you get above this high from, just going to grab it for you there. My mouse works. 24.60 on July the 6th. Once you get above there, you have this gap. So the stock opens up actually. If you get above that 24.60, not a lot of reference points until you get to the low 25.10 of July the 5th. So there's a 50-cent gap in there. VMware also provide preliminary results. Stock is trading up as well. Always trades very close with EMC. Stock is trading at 85.05 right now after closing at 80.29, so getting a nice lift after making a new low on the year there yesterday. Stock actually trading higher and getting up close to this double top area. You had a high at 85.78 on the 16th. You had a high of 86.09 on July the 13th. That's pretty close, so we'll call that area a double top. Going to give you probably some initial resistance there if the stock continues to go in a rally mode. 85, I'd expect anything in the high 85s to give you that resistance. Bank America reported here as well this morning. Stock has had a pretty wild pre-market. Initially traded down to $7.84. The number itself, they beat by 5 cents, but the revenues were a little bit light. Initially it traded down, but then rallied, got as high as $8.13 in the pre-market. Now it's settling right in here, right around this $8 figure. So it looks like $8 could be a type of magnet trade here. Again, we always talk about magnet trades. That basically when I say a stock is like a magnet, or a price is like a magnet, that means that the price will naturally pull towards that specific price. So if $8 is the magnet, if the stock starts trading up at $8.15, has a tendency to pull back to $8. Trades down to $7.85, has a tendency to pull up to $8. $8 being the magnet here. So it looks like you could have a setup for a magnet type of trade. Basically the way you'd play that as it pulls away from that price, you would fade the move. Honeywell also reported here this morning. 55.35 is where it's trading right now. Beat by 3 cents. Stock is trading up that 90 cents after closing at 54.54. Looking here, though, what jumps out at me is this whole $56 level. We haven't quite seen that high. We've been as high as $55.60 so far in the pre-market here. But if you look back on July the 10th, we had a high of $56.17. July the 5th, we had a high of $56.38. And July the 2nd, we had a high of $56.19. In between there, we had a little high of $55.94 on July the 3rd. So multiple highs up here just around this 56 area, and that could give you some initial resistance. If we get above there, maybe we'll test the high of June the 20th, which was $56.84. Abbott Labs reporting here this morning. This stock has been just on a run. Like we've been saying on the show, anything that's got a decent yield and a low beta has been attractive for investors this year, and those types of stocks have been pressing higher. We've seen stocks like Merck and Lilly making new 52-week highs. Abbott is no exception here, making new 52-week highs as well. Stock has not traded much. It's traded only 100 shares since it reported at 60, just a few minutes ago, trading 66.69. Is offered at 66.37. Best bids at 66.10. So very quiet action after Abbott Labs has reported this morning. It's going to be hard to get a feel. A lot of times these stocks here don't have a lot of action in the pre-market. Obviously, off the hop in the first few minutes will probably dictate if they're going to like the report or not. When stocks are making new 52-week highs, I do like to highlight something though. As they approach whole numbers, there's often institutional sellers at those levels. So don't be surprised if 67 offers you some resistance. Even the half numbers like 67.5, 68 if the stock starts to go up to those levels. And when you have those institutional sellers, the high frequency traders are always close behind. They usually lean on those institutional sellers, offering their size just below wherever the institution is. So for example, if we we do find size at 67 institutional size, you can be pretty sure there'll be some some high frequency traders leaning on those institutional sellers in the 66.90s. So I'd expect that the Abbott Labs continues to run. Maybe it pauses in that 66.90 to 67 area. BlackRock reported here this morning. Not a lot of trades, actually no trades to report here as of yet. Has reported earnings though. We'll have to see where it decides to go in the pre-market. But just to highlight some levels here, you can look, you almost have like a triple top thing happening here. The high on July the 13th, 76.40. The high on July the 14th, or the 16th, sorry, 76.47, and then yesterday's high, 76.44. So that's as close to a triple top in this decimal world as we get. I'll just draw that on the chart here. This whole level here, this 176.40, 176.50 area has been providing you resistance. And if we go back even farther than that, you can go to mid-June, this 177.35 area was providing resistance back then. So if it gets above 176.50, that area, then maybe you run into a little bit of trouble in that 177.30 area that we just talked about. Above there, the stock starts to open up to 180. So if it got above 178, the 180 could be on the radar on BlackRock. If it goes into sell-off mode, I'd keep an eye on yesterday's low of 172.32, and then looking at this double bottom here at 169.45 and 169.32 from July 6th and July 7th. USB reported earnings here this morning as well. Stock is breaking out to a new 6-month high here, 32.95. Actually, it's trading rate flat right now, 32.95. A few minutes ago, it was trading up at 33.26. So it looks like it could trade higher here today. Again, muted trading action in this one. I think a lot of your big players are trading the Bank of Americas and the more high-profile earnings. But USB will be moving. You can guarantee that today off this earnings report. Trading 32.95 flat. I'd keep an eye on yesterday's high at 33.26 and yesterday's low, which was 32.44. Use those numbers for reference points. If it really goes into sell-off mode, huge support down here just below 32 at 31.84, 31.80, 31.83, and 31.76. Call that a quadruple bottom down there. If it gets down to that area, I would expect you to get some pretty decent support down there. We do have quite a few earnings here to highlight after the bell as well. The big one that's going to report is IBM. They're due to report after the bell tonight. Stock is trading relatively flat. It might be up a little bit with the EMC preliminary guidance there, but 183.90 is where IBM is trading here. This stock has been weak. It's had a terrible year so far and a really terrible month. Stock was trading 197 earlier, just about 2 weeks ago. Now trading 183, so it's at a 14-point haircut here in the last 2 weeks. Been weak going into the number. It'll be interesting to see if indeed IBM comes out with weak numbers, or if they buck the trend and come out with a decent report. I'd keep an eye on this triple top here, 186.29, 186.10, and 186.33 from July 13th, 16th, and 17th. That's probably an area that you might run into some resistance even today in today's trade. And then obviously keep an eye on the low of the move so far, which is 181.85. We do have numbers for this if you're interested on our site. If you go under the S&P numbers, we do have IBM technical numbers if you want to look out further than that. eBay is due to report here after the bell as well. Stock is trading just about flat here right now, up only 8 cents at 39.15. Had a wild run yesterday. This stock has actually found some great support down here in this $38 area. If you go back into early June, we bottomed right on the button at 38 on June 1st. And then yesterday, with yesterday's early sell-off, we got as low as 38.06, bounced off that level as well, got up to 39.07, or got up to 39.43 before pulling back to settle at 39.07. So $38, I would keep an eye on that number as initial support. $40 could provide you some resistance, big hole number. Gets below 38, you have this whole gap area. So we don't have a heck of a lot of support until the high from April 18th, which is 36.28. So if it gets below 38, could fill this area relatively quickly. When you have gaps in the chart, basically it's just not a lot of reference points in those areas, and the stock can move with ease through that area. American Express is due to report here after the bell as well. Stock is trading up slightly here in the actually hasn't traded any trades in the pre-market. That was last night. But 58.68 is where it's settled. Got as high as 59.22 yesterday, and actually traded down as low as 57.67, so a pretty big range there for American Express. Has a nice trend here going. I'll just draw that for you on the chart. You can see the uptrend, kind of like the S&P has had this trend as well. So its chart's very similar to that. I'd continue to keep an eye on that trend line. If you get as low as 57.38, you would be at the bottom of the trend. So if you're a trend trader, that's where the bottom of the trend is. On the upper end, look at these couple of highs here, 59.46 from July the 3rd and 59.69 from July the 10th. Actually, 59.73 and 59.69. Those are those two highs. Keep an eye on that. That's close to a double top, as you probably get with the decimal world we're in. So I would keep an eye on that. Gets above there, maybe $60 is on the radar. We did top out 3 times back in early May, right below $60. So $60 could be a big number. I'd expect some institutional selling pressure there. I'd also expect the high frequency traders to be just in front of that institutional sellers in the 59.90s. Qualcomm's due to report here after the bell as well. Lots of earnings. We're in earnings season. Qualcomm, 54.50 is where it's trading up right now, up about 4 cents in the pre-market, so pretty quiet morning here so far for Qualcomm. Stock has actually had an interesting range here, though, from yesterday. Got as low as 53.09, as high as 55.33, which coincides nicely with the high from the 16th, which was identical at 55.33, and the high from the 13th, which was 55.18. So keep an eye on that double top of 55.13 on Qualcomm. On the low end, that 53.09 actually is very close to the 53.11 low we had on July the 12th. So this sets up nicely where you've got kind of a double top up here at 55.33, and you've kind of got a double bottom here down at 53.09. So if you're a range trade channel trader, that worked yesterday. Maybe it works again today. Hard to say. Expect volatility, though, ahead of the report. Wanted to highlight a few other concerns here, though, is that these European banks continue to break down. Deutsche Bank making new 52-week low yesterday. That's actually, if we go farther on the chart, that's not only a 50. Well, actually, it is. It's just a 52-week low. We have to go back to September of last year, where it got down to 28.57. But new 52-week lows for these European banks is concerning here, considering they supposedly had somewhat solved for the 25th time, I think, their European crisis over there. Obviously, there'll probably be more problems in the future as these banks are starting to dictate here, as Deutsche Bank's breaking down, Barclays is breaking down, Credit Suisse is not looking pretty. All of these things are at or approaching 52-week lows. ING a little bit better. RBS, though, near its 52-week low as well. So all of these European banks continue to break down, which is obviously concerning for the overall European market and concerning for our markets over here. So let's just take a look at the S&P. We still have this channel that we've been trading, this upward channel, where the lower end of the range was actually got very close to again yesterday, but it was held intact. We were saying there was support in the 1341 to 1343 area. We actually got down to 1339.5, so we got down just slightly below that support, probably to shake out whoever was buying right on that support level. But this channel is still intact. We violated it a little bit back on July the 12th, but we didn't have a close below there. So overall, this channel is still intact. So keep that in mind if you're trading, that the S&P continues to trend upwards. If it was to cut below 1325, 1330 area, then it would be violating that trend. But until it does that, I'd continue to buy pullbacks onto that trend line, and obviously selling towards the upper end of the trend line. So that's our show for today, folks. I hope you guys have a great trading day. And once again, I'm Dennis Dick for premarketinfo.com.